Okay, part two. Wanted to finish up on the SPY. Okay, so anyway, all I did was I just moved the strikes down a little bit. Why? Our because I saw the previous high on the SPY was it's just judgment, you know. You can go strictly by the math too, but I already have positions on. So all I did on those areas. So here's what I was looking at. I'll just zoom in right here. Okay. So the previous high was 201.9. See that? And you know, since bearish, I figured it'll go down more, and it has a lot more. If it does go down more, it has a lot more way to climb before it hits 200. Okay, right here. So all I did was, and I'll do it real quick. Right, here's the default settings. Right. Okay. So you see here, see these white dots? I pretty much already have these positions on. Okay. Um, so I didn't want to put another one on. I mean, I know the percentages would basically already have those positions on. Okay, see, 1 standard deviation away. But because I'm bearish, I figured, okay, why don't I skew it down to the downside? So I just skewed it to where this got to around to this, see, because I already put it on, right? So I skewed it to this call position, got down to 200. Okay, so I'm I'm skewing it to the downside. So all I did was I moved my strikes like this till it got to about here. Okay, to the 200, and then I wanted to collect more. So basically, I moved this up, I guess. I mean, maybe the pricing is different. So I've got the 197 200 call. And I'll look over here, and I believe I have the 197 200 call, right? I'll just double check. Oh yeah, what am I doing? I'll just go to Dole real quick, and I'll. No, I don't want to do that though, because then I'm gonna lose my. Yeah, I got the 197 and a two. Yeah, 197 put 200 call exactly. Okay, perfect. So that's all I did. Okay, and I collected that much, and I figured, you know, I'll manage my winners there with the high. My edge is going to be that high IV rank. Okay, so I'm hoping. Remember, I told you, if you recall, I was kind of hoping it'll bounce between 190 and 200 anyway. 190 and 200 anyway. Okay, and oh, if you saw back here, if you want it, the video for the VIX is, you know, here, the VXX trade, and I got the snapshots here. Okay, on if you look right here, look, I'm risking 167 to make $333. That's just unbelievable, and that's my edge. So basically, that's why I did what I did there. Okay, so if any questions, just give me a. You can shoot a question out here in the shout box, and I'm going to answer Jeff Balboa's question right here. For new beginners on the charts. Okay, so anyway, I hope that helps. So, but tomorrow, what if I were you folks tomorrow, I would definitely put on more Golden Gecko trades. Especially since the market shot down, you're gonna be able to collect a lot more money on the puts. Here, check it out. I'll just go back to a standard Golden Gecko. Look, on a standard Golden Gecko, you can collect 66 cents. Oh, I'm sorry, on a mini Golden Gecko. Okay, 84% of the money. On a standard Golden Gecko, you're going to move this to where it says 2% or at the 2 standard deviation line right around here. And look, on a standard Golden Gecko, you can pretty much collect $1.10. That's pretty unbelievable. I mean, that's, you know, it's good. You can make good money. You're going to tie up more capital, but that's okay. It's still almost about a 10% return on your money. Okay? So go for it. All right, let me cover this real quick. All right, the charts. Let me go back to this. I'm going to go back to my original study, and I'll zoom all the way out. Okay, so for beginners, this is just my basic chart, and in the shout box below, I have a link to this already. Okay, in the shout box, or if you go to the forum and just go down here, it's right here. Okay, just copy and paste this, okay, into your browser, and have your Thinkorswim running. It'll open up in Thinkorswim, and all you gotta do is save it as whatever you want to call it. Put your name, chart one, or whatever, right? And this will be your basic chart you're gonna work off of. All right. So these are Heiken Ashi candles, which means don't change as often, uh, and it's just a lot easier to see a trend. Okay, and all my charts are real basic. I have a 233-day moving average in white. I have the 13-day moving average in magenta and the 21-day moving average in yellow. Okay, and then you'll see these arrows over here. See this? See these arrows? The yellow arrow is when the I'll just use a green arrow here real quick. The green arrow, I'll just zoom in. Maybe you guys here. See this green arrow? This is when the 13-day moving average crosses above the yellow line, which is a 21-day moving average. You're going to see a green arrow come on. Okay? A yellow arrow is opposite if when the 13-day moving average crosses below the 21-day moving average, and that usually signals a downward trend. Okay? Green arrow, upward trend. And then these cyan lines are Bollinger Bands, and they're drawn at 2 standard deviations. All right. To see the studies, you just click on Studies and go to Edit Studies, and you'll see all your studies. Okay, and don't worry, it'll all be there when you click on copy and paste that link. Okay, this is your IV rank chart. This is a visual chart of IV rank, which in TOS is the same thing as your IV percentile. Do not confuse this with implied volatility. Implied volatility is different. Implied volatility is your implied volatility per month, and you'll see that when you go into your trade pages and whatnot. Let me show you that. Okay, so implied volatility and IV rank are implied volatility and implied volatility rank or percentile are two different things. Implied volatility rank or IV rank and implied volatility percentile are the same, but implied volatility is different. Go to your trade page and you'll see what I'm talking about. Okay, this is your option chain for each month. The ones in the white are your standard contracts. If it says 100, these are your standard contracts. That means one contract is 100 shares of stock. Okay, but see these numbers right here, these percentage, that's the implied volatility for each month. Okay, so each month is different. Rank is how this implied volatility is compared to how it's been versus itself over the last 12 months. Okay, that's called implied volatility rank or implied volatility percentile. You can see that by clicking your option statistics tab right here. Okay, and then you will see that, see where it says current IV percentile? That's the same thing as IV rank. Look, 63%, right? Now look when I go to the chart. See, 63%. So that's why it's different. You want to trade when this is above 50% or greater. That gives you that little bit of edge when you sell premium. Okay, so this is just a visual. This green line is 50. This red line is 25. Okay, when IV rank is above 50, this will be green like this. If it's between 25 and 50, it'll be yellow, and below 25, it'll be red. Okay, so you want to trade when the sucker is green. On balance volume cross, this chart, basically this is just a chart that says when there are more buyers than sellers or more sellers than buyers. When there are more buyers than sellers, it's green. When there are more sellers than buyers, it's red and going downwards. Okay, so basically the best time to buy on an upward trend is when it's from the bottom going to the top and it turns green and it crosses its 30-day average, right? When it goes green, it's usually a bullish sign, like it's going to go up, see? And it stayed up. When it goes red, it's usually a bearish sign. It's going to, and it crosses this blue line, it'll go down. Okay, so when, look, and it signaled a downward trend, right? Now, slow stochastic is just an oscillator, but this is a different oscillator. If you notice, my settings are at 39.1, which is not the normal settings, but yours will reset to that by default when you click on the link. Same thing. When it's green, it's considered an upward trend. And this is the 80 percentile line, which means it's over 80%. It usually means technically it's overbought and it's due for a correction. So how I used to use these for swing trading is when this is coming from the bottom to the top and turns green, and it only turns green when it's about to cross this 30-day average. Okay, when this went green and then when this went green, when they're both green at the same time, is a good time to buy on an upward trend. When they both turn red coming down at the same time or close to each other, that's a selling signal. You saw green here, right? And it's not green. See, green here but it's not green yet here, so you don't buy. The next day it's red here and it's green here, you don't buy. Okay, now all of a sudden, look, it's green here and it's green here. That's the buy signal, and then you would have caught this little wave up. Okay, same thing, right? Red here, but not red here, stay in it. Red here and still green here, stay in it. All of a sudden, what? Red here, that's when you saw this strong, that was a deep downtrend that day. Okay, but my main one is volume, because the only thing that makes a stock go higher, the only thing that makes a stock go higher is if there's more buyers and sellers. This bottom chart helps you kind of avoid a fake out. Like sometimes, what's a good, yeah, like sometimes it'll be green here, but not green yet here. You might get a fake out. Like it might go up and then fake you out. For example, I don't know, on ETFs like the SPY, they're pretty easy to see though. But see, look here, green here, right? And look what happened to the stock. Red here, still green here, but it's red here. More sellers than buyers. Of course, look what happens. Some down ticks. Okay, same thing. Red here, downward trend. So you can kind of, I really watch this one. So that's why I said in the SPY, it's pointing down and it's red. It's a bearish signal, which is why I put on those trades that way. Now the only other two charts I can show you, and you can add them later, and I don't keep them on here, but you can add them later. Like when you go to studies, just go to edit studies. I'm sorry, go to add a study, go to all studies and hit ADX. This is a trend index, meaning how strong, average directional index, meaning how strong a trend is. When a trend is above 25 and it's going up and it crosses the 25 line here, it's considered a strong trend. When it starts to decrease like that, I mean the trend is, and it's above 25, the trend is still strong, but it's decreasing. Okay, what I use this for really is I use it for those hono trades, because I've noticed usually when it's crossing below the 25 line, when it's coming up from above and it hits 25, like right around here, it's going down and it crosses below 25. Okay, it usually signals a stock is going to stay within a tight range. So if IV rank is high enough, I want to sell those hono, those synthetic straddles at the same time when that happens. So look over here, that happened, but see, IV rank was low. I wouldn't want to do it. So look when IV rank was higher, like than 50, and when this was below 25. Okay, but see, it's too low. It's 12. So I want it crossing below 25 while IV rank is high. Okay, so it didn't happen too much. Like here's 50 right here. Like this is an interesting time. It hit 50 on February 19th, and IV rank is, and then ADX is going down. It's at 21. Okay, could have been time to do one of those honos. And if you look, it kind of stayed pretty tight in that range. Okay, so anyway, that's just that chart. The other chart I use, which has everything, is I saved it under, I think I loaded a study set here, is I just called it my little clean chart too. Oh my god, my computer froze. Okay, here we go. So this has pretty much everything on it, except I just added this. This is a traditional slow stochastic. Your settings are 25 and 3. And it's usually considered an uptrend when the red line crosses above the yellow line. I'll zoom in real quick, anywhere you want. See, so when it's at the bottom here and the red crosses above this yellow line, it usually signals an upward trend. As you can see here, it started right here, right? Upward trend. Okay? But it's weak because this is still red, but it still went up. That's how strong the S&P/Y was. But as you can see right here is when it got really strong. Green here, red is above yellow, and it went up. Same thing, look over here. Red crossed above yellow, even though it's on the high side. Green, you know what I mean? Oh, actually, here's a better one. On balance volume turned green. Slow stochastic is still red, but it went green right here. And from here, look. It's been up since then, actually. It hasn't gone below. So it's good when you can catch it from the bottom. Anyway, that's the charts. I have these all sent to you, but just click on that link and it should be there. If you need it, just shoot me an email in the shop box and I'll email it to you if you want. All right, have a good one.